Ladies and gentlemen, it's 6 o'clock in London, it's 1 p.m. in New York, it's 1 a.m. in Hong Kong, and it's 10:30 a.m. in San Francisco, 10 a.m. indeed in San Francisco, 3 a.m. in Sydney, and 10:30 at night in Mumbai. Good morning, good evening, good day to you wherever you are in the world of markets. My name is Patrick L. Young. The IPO-VID Livestream Series 3, Episode 5 starts here. So, since our last show, episode 16, we're now on to episode 17. We have the happy news that no fewer than 5 million new investors joined the Moscow Stock Exchange last year. Now, that's pretty spectacular given the fact that they started 2020 with only 3.8 million investors. They ended the year with 8.8 million investors, a stunning record number of new arrivals into the stock market. Of course, the Robinhood phenomenon has been a massive thing in the United States of America, but one other country with an enormous number of new investors has been China. Some 18 million accounts were added over the course of 12 months. In other words, that's more than the population of my native Northern Ireland every month. That looks like a pretty lucky number in the West, 17.77 million investors. But I suppose in China they might have been even more interested because that would have been something like 18.88 million investors, which would have been, of course, a series of lovely lucky eights. This is a phenomenal increase in our markets. It's wonderful to see so many investors in there, although I suppose the Robinhood meets lockdown effect in the United States of America certainly brought more capital into capital markets, if not perhaps quite as many people. That's to be debated for the future, as is the commercial future of the Shanghai Stock Exchange. There's a group of financiers there want to see the management being a lot more commercial than the current Communist Party apparatchiks who get to run the company by rote. Will we see an IPO of a stock exchange in communist China? Well, that, ladies and gentlemen, would surely be a major win for free markets. All this and more has already been covered in greater detail in Exchange Invest Daily, the unique Bourses of Business magazine. The only newsletter devoted to the business of bourses. Send us an email or hit me up, Patrick L. Young, whatever social media you're watching this on, and we'll sign you up for a free trial. Meantime, ladies and gentlemen, do me one favor. Give me a little bit of physical violence today. Can you smash the like button just underneath wherever this screen is on whatever social media you're watching? Help us get to the giddy heights of social media excellence so more people can see us, and indeed we can enjoy more illuminating conversations with guests such as today's guest, Modwenna Rees-Mogg. We're going to talk about startup pluralism. Just to give you a little bit of a flavor, Modwenna Rees-Mogg has over 30 years experience working in corporate finance, business angel investment, and venture capital. She started the portal angelnews.co.uk in 2003, which is almost the ice age of UK startups, I think, in many respects. It's certainly a sort of a pre-Jurassic era compared to the modern machinations of the startup communities, with only £1,000 of startup capital. Good for you. Angel News Group has been expanding ever since, and that's what we're going to be talking about today, amongst other things, along with her other ventures, such as the Pluralists Club, and indeed the various events that she's managed over the years, such as the Great British Private Investor Summit and the Venture Capital Trust and EIS Investor Fora. Modwenna is a non-executive director of the quoted Albion Technology and General Venture Capital Trust, and also she's a non-executive director of Asset Match, which is closer to our parish, being a lovely little niche bond platform. She was also a co-founder of the ratings agency crowdrating.co.uk, which was sold to NextFin in 2019. As always, you know the rules, ladies and gentlemen. Ask us a question. We'll be delighted to pass it on to Modwenna. Let's get this conversation started. We're going to be looking at startups and all sorts of early stage investing. Modwenna, good evening. Welcome to the show.
Good evening. It's lovely to see you.
It's a delight to see you too. Thank you very much. Now, where are you joining us from in this wonderful world today?
I'm in deepest Somerset in the UK, which is south of Bristol for your international readers if you get out your maps. And it's pretty rural around here, and it's getting warmer, but it's been quite snowy for the last few days.
Yes, the UK blanketed with snow recently. I've got to say, Somerset, if you don't know it, beautiful place to go. Ideal place to enjoy the delights of the English countryside. Best served, I think, with a side dose of a good classic car to enjoy some of those elegant side roads, but not at great speed because we don't want you to scare the animals. So, Modwenna, tell us a little bit about yourself. How did you get started in the glorious, glamorous, and incredible city of London?
I started off by getting, well, actually, slightly before I got my job, I managed to, by accident, win a competition that ICI set for selling bathrooms and bathroom suites online or via a sort of, it was a game we had to play. And I won that, and that made me feel that I was probably quite businesslike as a student. And then I left St Andrews, University of Scotland, and joined Kleinwort Benson, which was in those days a major, we called it a merchant bank, but think of it like a British Goldman Sachs.
Absolutely, quite the bank indeed in those days. That was a super name altogether. So, what were you actually doing there? Were you working in corporate finance?
I was, yes. I was doing international M&A, flotations, takeovers, right down to advising companies on what dividend they should pay.
Fabulous altogether. So, how did you manage to get from there towards the idea of founding Angel News?
I left the city to actually to get married. Don't tell the boys. But and then moved down to Somerset and didn't want to get a proper job again in London and have to commute. So I fell in with a load of entrepreneurs and other lots of entrepreneurs and hung out with them. And then someone I know who I had helped get their business to become a sort of simultaneous cash cow and superstar. They asked me in dot-com boom times to run what you would all know as an angel club. So we got together a crowd of high net worth investors and started showing them some deals.
Fantastic. And so that was all in Somerset, was it, or around about that area?
No, in those days it was in the activity was in London, the live activity, and I had a very pretty ropey dial-up CompuServe connection. If anyone remembers CompuServe, and I used to have to go down to my IT shop to nick their broadband because they were the only one with broadband in Somerset. So I'd sit on the bench next to their techies trying to get enough broadband to do stuff. And then after a couple of years, I decided that I'd set up Angel News because I fancied being an entrepreneur myself.
How fantastic. And actually, yes, gosh, I do so well remember CompuServe, an organization which was so keen to exploit the liberty of the World Wide Web that everybody had a number rather than a name, if I remember correctly. So you're 7031642. Don't feel as if we're taking away your anonymity there. Yes. Gosh, CompuServe, that really takes me back actually to that sort of early zeitgeist of the dot-com era. So therefore, so where are we at the moment? We're in like the late 1990s, something like that?
We're in the early 2000s.
Early 2000s.
And then I've got to know a lot of angels, so I set up this news service so they could all find out what was going on, because I discovered nobody really knew what was going on except in their own little world. And we didn't have the internet in the way we have it now. So news was the broadsheets or the tabloids, maybe specialist mags. So it's a sort of specialist mag online for the angel industry.
Well, that's a great thing. I mean, that's the sort of thing where, good grief, even only in the last decade, I discovered nobody seemed to have done the same thing for the exchange industry. So anybody who's looking for a good startup idea out there, as long as you're obsessively pathological about your niche, there's actually a good publishing opportunity at all points in time. So Angel News nowadays, you've become really the kind of go-to space for angels in the UK. I'm sure it wasn't that easy at the first. I mean, you had a small group of people. How did you manage to grow the business?
I started with my mum as my first subscriber. And we just gradually started putting news up. And I still remember the day it took 4 months for somebody to actually send me a story of their own accord without asking. So I did 4 months of building content on the site. I then decided, I was gobsmacked when the first story came in, I still remember it. And then I decided as a publisher, I should publish and be damned. So I started sending a newsletter. And again, these are long before the days of MailChimp and everything. So I used to just collect email addresses from people who subscribe to the site and then download them. And then I would BCC them in chunks of 100 with my monthly newsletter, which if it was a bit weak on content, I'd just put a newsletter out telling jokes or something, anything to get people reading it and opening it. And it went global without me realizing. So people started ringing me up saying, what on earth are you doing? And, I'm in Canada. Or I was like, well, it's, what I'm doing. I don't quite know how I'll monetize it yet, but one day. And so then in 2005, I hired somebody to help me who had experience of working with startups. And he went and I gave him 3 months to find the first customer, or he was fired. And he found the first customer after 2 months, 3 weeks. So we were off.
Excellent. And so therefore, what's the business model now? Straight subscription for readers, or how does it work?
So it's really advertising at the moment. It's sort of one day I'll make it subscription, but it's such a useful platform for the other things I do and the knowledge I get to learn but share with other people, and that makes me very useful to other people. So I do conferences and I do research work and survey work and a bit of advertising, and then one day, Patrick, maybe I should talk to you. I should go subscription. Well,
I think it's a really interesting thing going to subscription models, because you instantly lose a vast chunk of your circulation, and therefore you've really got to be in, I think, you've either got to be an incredibly micro niche, or you've got to have some sort of product that people just feel completely desolate without. And that's a huge issue. I mean, we started free with Exchange Invest, and then we went subscription only because really it was the best way to manage to make it work. And I knew that actually I'd made the right decision. I will tell you an anecdote back. When I was testing the software for the payment gateway, the first payment gateway, and somebody subscribed, because he'd just been going through the site, and it was at like 11 o'clock on a Saturday night, because I thought nobody will be reading about exchanges then, so I can test this thing. And suddenly he saw this payment gateway come up, and he thought, oh, I'm subscribing, and subscribed, and said, I just got my #1 subscriber. And now he writes to me all the time and says, it's me, subscriber #1, and I do, if you're watching, you're the best. So that's a great story. I think that's really good. But it's very interesting. And with a more mass market product, where obviously you're looking like angels and stuff like that, you can reach an enormous number of people around the world by keeping the list free, and that's obviously very advantageous. So give me a little flavor then about how do you see the world of startups and the whole ecosystem? I mean, it's radically changed from where it was in 2002, 2003.
I think in every way, the costs have come down. So I think you really should be able to start a business with £1,000 now. If I could do it with £1,000 back then, yeah. You've now got what I call a volunteer army, because of the economic conditions. There are a lot more people with either because they haven't got work or because of lockdown, they're knocking around. So they've got a few, grab that free 20% of the time they have, get them to come and help you. So the costs of starting a business have dropped. And at the same time, we have the fantastic arrival of more and more capital into the market as investors hunt for growth. And they know they get growth from unquoted companies. That's where it's coming from, certainly in the UK. Yeah,
it's really fascinating. And also, of course, the UK has this, for our foreign viewers, long-standing series of tax breaks. So therefore, you have this enterprise investment scheme and all the related things around it. I mean, they've been a huge fillip to the startup scene in the UK.
Yeah, it's about, I think about 5 or 6 billion is going in across VC and angels a year into about 6,000 companies or more. So, there's definitely a lively community. And so, yeah, if you're abroad, come to the UK and set up your business. Please do.
It's an incredible number. I mean, 5 to 6 billion in terms of, and that's pounds. So in US dollars, add 30% on top. It's an amazing number to be seen going into those sorts of companies. Also, I think, one of the things that always strikes me is the UK's great advantage is it's cheap. I mean, nowadays, mind-bogglingly cheap to actually start a company. I mean, for a lot of countries.
Yeah, £50.
£50, yeah. I mean, it's incredible. We had a subsidiary in Romania at one point, and that was actually the ultimate in Kafka's corporate formation, because you walked around this office where you had to have your piece of paper stamped by desks A, B, and C, but B and C could only stamp after you'd been to A, D, and E. which made it quite difficult to then get to F, which you needed to get back to C. I mean, simply impossible. I mean, just impossible to do. So, if you're looking to set up a company, and I know actually, I mean, that's a big thing in Eastern Europe, Central Europe. A lot of people, particularly in the era of the EU and the UK being a member, a lot of people were setting up UK companies because it was actually cheaper. You can find Polish websites with Polish chartered accountants in the UK who'll service your startup for you because it's much, much easier to run a business in the UK.
Yeah, we have very clear law and very clear rules. And if you set up a UK company, indeed, actually, if you're an overseas company but set up a UK subsidiary that's an authentic company, so you can't have an office box, but actually you can benefit from English investors can invest in that subsidiary and get tax breaks on investing in you. So even if you're operating abroad but want to set up in the UK and need capital, set up your business also in the UK as well as your own domicile, and then start raising capital over here.
That's fascinating. I mean, that's really, really interesting when you think about it, because the UK really has become such a magnet for the ease of doing business. And it's even something you can't necessarily get in other countries, because certainly, I mean, the £50 entry level is the cheapest I can think of for company formation anywhere. And it'll be done also, I mean, read this and weep, many jurisdictions the same day.
Yeah. Oh, yes. Half an hour, I think, probably.
Yeah.
Okay.
And you can file all your paperwork online, pretty much, and you can do everything. So you don't need to end up making endless. Good grief! I'm sure. Well, you remember only too well the opportunity to post things to wherever it was, Swansea or somewhere, or wander up to City Road in London at different times, and it's all gone online, which is phenomenal.
You also have our company's registry is available free online. It's companieshouse.org. Yes. And that's an amazing repository of all companies registered, Companies House are registered there. You can go online for free and look them up and look up their accounts. So if you're doing competitor analysis, you can find out what's going on. It's phenomenal.
Yes, it is. I agree. And that's been an incredible achievement, because it used to be, I mean, you could always do that, but you had to pay whatever it was, a few pounds, and you had to trek to the top end of the city and look at microfiches, which wasn't quite as user-friendly. The GUI on microfiche machines really needed a lot of work over time.
Yeah.
Look, it's really quite incredible. Ladies and gentlemen, we're just coming up to 20 minutes into the hour of this discussion. I am here with startup guru, Modwenna Rees-Mogg. She's talking to me today about all sorts of issues. She herself is an avowed pluralist. We'll be getting to that in just a second. We'll be talking about the background to her career in startups. What would you like to ask Modwenna? She's here to talk about your startup issues, angel issues, as you go through them. So, Modwenna, I mean, you've seen this incredible sophistication of startups. You're talking about £5 to £6 billion. What's that? Better part of $8 billion or more every year being invested in 6,000 startups. How has the actual approach of investors changed over time? Because certainly 15 years ago, you weren't seeing anything like that amount of money raised, and obviously the rounds were much smaller.
So I think one thing that stimulated the increase in investment by angels in particular was the tax breaks, which they started increasing the levels of how much you could invest each year. So back in the early 2000s, I think it was £200,000 a year, and now it's sort of £1 million a year. So that has driven up capital into the market because more people can invest more. Startups have become better. Investors are hunting for growth. And as many a wealth manager tells me, it's the unquoted part of their portfolio that investors really love, particularly if they're ex-business people themselves. So most business people are not that excited by looking at black and red numbers on a wealth manager's report, but they love talking about their angel investment.
Fascinating. I mean, the whole sophistication of the way that there's now an epicenter of the startup business has become incredible. And indeed, when you started in 2003, I can't think of a single accelerator or incubator that was actually in existence. Perhaps there was something in the university, but I don't think there was anything, no?
No, I mean, some of the angel networks have been going as long as I have, and longer, but there were very few of them. There was always been investment going on. It just maybe wasn't called angel investment. But now we have a much more formalized, people write books on how to do it, people give training on I give training on how to do it all over the world. And so as a result, it's a more sophisticated, I'm not certain it's actually an asset class yet in its own right, but it's almost there. And that means that people can then to join that bandwagon, and the quality rises, the experience rises. We've got, I think, 29 unicorns in the UK. So for investors, it's always, you might just hit the jackpot.
Yes, it's incredible. I mean, you think about the early 2000s and you look at, there was a relative paucity. Okay, there were some of the people who came through in the dot-com bubble and some of them, of course, disappeared. But we did have various sort of internet darlings who became quoted stocks and so on. And before that, we'd had, I suppose, Herman Hauser who created the Acorn Atom, which was,
He's still investing.
I know, amazing man, incredible man altogether. And he produced the Acorn Atom, which I remember being a computer I lusted after when I was a very, very young schoolboy, but could never afford. Must have been all of £150 at the time. It's an amazing thing, but he certainly drove a lot going forward. What is the situation these days? I mean, are there really high profile investors that we're seeing that are causing a lot of this movement, or how does the ecosystem work in terms of its investment dynamics?
So we've always got two ends of the spectrum. So you've got quite a lively equity crowdfunding market, which is a good entry point for many investors. In fact, one of the investors who writes to me, he's got 700 equity crowdfunding investments. So there's that end of the scale where there's people investing in 50 to 100 quids. And then you've got the high rollers. I think there are about 150 people who invested £1 million in 2019 under the tax break scheme Angels use, called the EIS scheme. So it's the full range. Typically, a typical angel, and is there such a thing, would invest between 25 and 50 grand per deal in the first round. But of course, they nearly always have to invest in another 3 or 4 rounds after they've done that first round. So maybe putting in 50 to 100 to 200 grand per company that they invest in. And of course, the trick for them is to build a portfolio, because diversification, just like in your world, Patrick, diversification matters. And you need quite a lot of deals to diversify the risk in angel investing. Probably at least 15, but more like 30 to 50. So,
yeah. And that is a big issue, doesn't it? Because it takes quite a long time to close 15 deals, let alone 30 to 50. I mean, it's going to take you 5 years to really build a portfolio, I would have thought.
It does. And it all depends, how much work you want to do on each one. So some angels do fewer and do them really deeply. Others join syndicates and so share the workload, share the responsibility. And other high rollers just buy their seats at the table big time and, make sure they've got the entrepreneur's attention that way.
Fascinating. So there's all human life is there, as Paul Gallico said about writing about baseball all these years ago. What about the actual sort of rounds? I mean, you've mentioned how much more money is being invested, but I'm sure you've seen a big change in the size of even the very earliest seed rounds as we've gone through the last 15 years.
I think we've seen a greater understanding of, to make something become a unicorn, it needs investment. It's hard to do it quickly with no money. So there's various variables, time, money, and people. And if you don't have enough of all three, you won't get there. So we are seeing round sizes rise. We have an even more generous tax break scheme than the EIS scheme, which allows not 30% income tax breaks, but 50%, called the SEIS scheme. So you see a lot of startups starting with 150 grand, because that's fairly doable. And then often we see rounds £500,000, £1 million, £2 million in sterling fairly soon thereafter.
Fabulous, really fabulous. And so if I'm a startup in the UK, how do you go about it? Is it easy to get this permission for SEIS or EIS schemes?
Yep. So the HMRC, to probably their chagrin, created a thing called advanced assurance. So you write to HMRC saying, I'm a new startup and this is what I'm doing. And they write back saying, yes, we agree you're eligible for for your investors to receive these tax breaks. So the company is the enabler and the investor receives the tax break.
Excellent. And presumably, therefore, that doesn't take months on end. I mean, HMRC are reasonably responsive.
Yeah, I mean, you wouldn't expect a reply tomorrow, but
no.
They're pretty good, and they're a very high quality gang of people. Actually, should I say about tax people? I don't know, but tax authorities. But actually, they're a great gang. Yeah, I know.
It's very interesting. It's very interesting. And so then just spell that out for our viewers again. So you've got this BEIS thing, and you've also got an EIS scheme, yes?
Sorry, so not B, S for sugar. S.
Oh, S. I'm sorry.
Known as seed EIS. So
EIS. So that's your first. You can raise your first 150,000 that way, right?
Yeah, and investors with spare income and spare capital like these schemes because they can get a 50% income tax break if they invest in an SEIS investment.
Wow.
And with EIS, it's a 30% break.
Okay, but you can only raise. So sorry, just to understand this, you can only raise 150,000 at the seed level. Is that right?
Yeah.
But it's not specified how much equity that is, just in case anybody's watching, trying to understand. Yeah, that's okay. It's just
when we did crowd rating, we raised our first 150 grand and we sold 10% of the business.
Right.
But we did. It's more typical that you'll be, and it's always something I've stressed is you are selling your shares for cash. It's not giving or any of the other words. It's selling, and it's more normal to be selling 25 to 30%.
Right. Okay, that's a good marker for people. We have a question. I do believe it is serial entrepreneur Dermot Core, a fellow countryman, although he's coming tonight all the way from, I do believe, his beautiful Idle in Poland. Hope it's not too snowy there. Dermot, good grief, you've blocked off my chin with the length of this question. So take a deep breath. What would you recommend, Modwenna, for a project which is to be spun off and needs to attract angel investment with investors who can also provide a roadmap for future rounds because of the commercial growth?
That is a fantastic question, not least because I've been getting very involved in the spin-out world in the UK in recent months. So I have a little bit of knowledge. So I think what you need to do is be exciting. And part of that is the communications of what you're doing. So I'm not sure whether you've got a new chemical or a new bit of software, but instead of thinking of it as a bit of tech or as a bit of a chemical, turn it into a story that investors can understand. And the other really important thing for me, and that's something I look at very closely, is do you have good financial controls in your business? And do you have someone in your team who is a really expert financier? That is one of the highest correlations for success in entrepreneurial businesses, not just the management team, a management team with a strong financial control. Doesn't have to be a finance director from a FTSE 100, but it does have to be someone who knows about bookkeeping and accounting and can help you prepare projections. So that is my big tip. And then, of course, you're going to need a business plan, a deck. Start with the deck, make the deck really tell the story and make it zing. And then get out there and start talking to people and tell people what you're up to and why this is going to be a great experience for them, not just for making money, because everyone wants to make money. Make it something that they emotionally engage with.
Fascinating. Really, really interesting question. And therefore, however you're going to spin this out, financial probity is absolutely vital. Also, we've got a question. It might also be Dermot asking a supplementary because he's wondering, are similar tax breaks available in the USA?
So the USA, it's generally the tax breaks if they're available at state level, not national level. But yes, different places do have good tax breaks. And actually, if you want to attract the biggest tax break, I think at the moment it's Turkey is winning the race. So they're offering a 70% income tax break to angels who invest. Wow.
That's quite incredible. Turkey offering 70%. Sorry, I think that's Rob, possibly Rob Hodgkinson, but I'm not sure. It's Rob H, certainly, who asked that question. I'm being told in my ear by the production team. Thank you for that. So Turkey leads the way, ladies and gentlemen, if you want to get a massive inducement on taxation for your startup. That's quite fascinating altogether. Those of you who fancy the opportunity to go to a very, very interesting and dynamic country. Do keep the questions flowing, ladies and gentlemen. I'm here with Modwenna Rees-Mogg. We will be delighted to hear more. Slight skew away from the more public markets focus of Exchange Invest, my daily newsletter, with our excellent guest this evening. So, Modwenna, you touched on something, and that was another component in the startup revolution in the course of the last decade or so, crowdfunding. The UK has really done very, very well with crowdfunding, I think. Tell us a little bit about it.
Well, my funny story is I have a lovely email from before Crowdcube, which is the big one that started first, from the two founders. It's a very polite email saying, "Dear Mrs. Rees-Mogg, we're two new entrepreneurs. We want to do this crowdfunding thing. Could we please meet you for a cup of coffee?" So we're still friends. But I think it's a marvelous addition to the funding community. I think most people are pretty rational, and if they want to invest 50 or 100 quid in a new pub or a new tech or a new food product, we should go for it. And the regulators have been very good about helping it to happen. And now I think it's some hundreds of millions are raised each year by crowdfunders. The other thing that I just, if I may just say, is your crowdfunding investors are also your customers and your greatest champions. So if you can get yourself 200 crowdfunders, you've probably got yourself 200 customers, and you've probably got, with their networks, 1,000 or 5,000 champions and people who could become customers.
And of course, there's some great stories about that in the UK, aren't there? I mean, I do believe the Brewers were very good at that, wasn't it? Brewdog and many others. They've had amazing stories.
On where I'm a like an asset match, we trade Brewdog secondaries. So yeah, they are a phenomenal story of how within, what's it, less than 10 years, Patrick, since they started.
Yeah,
and they're not just a brewer, they're a pub, and they're in America, and they've got, you know, my supermarket, everything's being pushed off the shelf so Brewdog can have more space.
Yeah, it's fascinating altogether. And I agree with you as well. I think, I mean, all too often we can join in financial huddles and complain about the regulators and complain about the tax authorities. But after saying a good word for HMRC, I'm with you. I think the UK FCA have been very pragmatic over crowdfunding regulation over time. How, therefore, does that, I mean, impact something like you're mentioning? Actually, tell us a little bit about it. Asset Match, this platform you're a non-exec of.
So I think that you referred to earlier, Patrick, that so many investments you could be in. We often say to angels, you should expect to be in for 15 years, and the cynics say it's longer than many marriages. So the angels have been sort of trained to get used to long investment periods. But what we're seeing when Asset Match is proving again and again is that actually there is an arbitrage opportunity for people to sort of get out and get into unquoted companies. So we're finding that people can make a good capital gain, but actually when they sell, they've maybe made 3-5 times their money already, but somebody else can still buy in at that point and make another 3 to 5 times their money. And as people begin to understand the sheer value of that, we're seeing more and more activity. That's really interesting to hear, the sort of private share market growing up. And so therefore, I may have mistitled it. I wasn't sure if Asset Match was purely a bond trading business, whatever. So it's actually doing secondary equity. It's all equity at the moment, yeah. Oh, fascinating altogether, really fascinating. And I do believe we've got another question has come in from Etienne Goffin. It's a pleasure to have you this evening, Etienne, on the show. You're on IPO Live. So Etienne is asking you the question, well, drum roll for a distributed $5,000, as the quiz host might say. What, Modwenna, is the best jurisdiction to relocate a blockchain-based fintech? Okay, so come to London. London's the home of fintech. I understand from one of my angel friends that Singapore is pretty hot too. I think that's a very good answer. I would actually say London's a great place to be. The only disadvantage to London is the cost of living. Everything else is absolutely fantastic about London in every possible respect. And the cost of living, well, that's just the premium you have to pay in order to manage to be in really the only cosmopolitan mega metropolis of Europe. I mean, it's quite incredible. So I would actually say that's the answer I would give to Etienne for my 0.02 Satoshis worth.
Thank you, Etienne Goffin. Great question. If you've got any more about startups, scale-ups, whatever you're looking at, ladies and gentlemen, this is the forum this evening with Modwenna Rees-Mogg. So, Modwenna, tell me a little bit. I mean, last week we actually had a guest. He's a publisher. He publishes specialist exchange-traded derivatives information. Ladies and gentlemen, if you didn't get a chance, watch that. It's a great interview altogether with Will Mitting. Now, one of the things we touched on was things like the conference business moving forward. You are a prolific organizer of conferences. You have some magnificent speakers like Dominic Frisby, who was on this show just a month ago, the Bitcoin expert, comedian, and many more things. A true pluralist in many senses. So tell us, I mean, how do you see the conference business going at the moment when obviously it's rather difficult to get out of the comfort of your own home?
I think people are adapting amazingly to the whole online Zoom webinar, these live streams. We're running something in 2 days and we've got over 200 people signed up, and it's relatively niche subject area. So I was getting 400 coming to a live conference, and we're now seeing the numbers grow online, and people seem to be pretty forgiving of that it's not live. I mean, I can't wait to get back to live and actually be with people. There's nothing like actually interacting as humans with each other. But I think the online world is working absolutely, it's doing its job, and people are beginning to be able to make money by doing online conferences.
That's great. That's really, really good to hear, because it allows you to carry on with what you're doing. And actually, that brings me to a very good topic of conversation. And actually, we're going to park that for 1 second, because we've got another question from a LinkedIn user. It might be Rob back again. He's asking, have safes made their way to the UK? And if so, what is your view on them for investors as well as for entrepreneurs?
There's quite a lot of chatter about them. There is some debate around how it interlinks with the tax break scheme. So we are finding that there's more talked about them. We're tending to use sort of convertible low note structures, but the government currently will not allow those sorts of structures to have tax breaks. So if you want tax breaks, you need vanilla equity.
So vanilla equity, get the tax breaks, but you can use safes and these other sorts of structures that are allowing you to go for a later valuation for your conversion, which is essentially, safes are another variation on the theme of convertible low note.
So they're good. Of course, they're good for investors, and in a sense, they're good for entrepreneurs because you avoid setting the valuation, and it can be very hard. We've seen in the UK, the government, because of coronavirus, has launched something called the Future Fund, and that's a CLN structure. But there's a bit of a sting in the tail because it's redeemable at 3 years at double redemption. So if you don't, either in 3 years' time, you're going to have to pay it back twice or convert. So I think the thing I would say is that these structures, they're just a way of avoiding making a decision. And for some investors and some entrepreneurs, it's better just to accept the decision. Something I think people always think that raising investment is a one-way street for entrepreneurs' stakes to go down, investors' stakes to go up. But one of my friends is just closing a 6 million round, still calling it a seed round, which says it all. And they've actually negotiated back from about 15%, I think, to 45%. Because they've said, I was too low. If you want me to make this business work, I need my stake to go up again. So I think, you should always, I think too much entrepreneurs think it's a one-way street, and it's always a negotiation. So be confident, be bold, be right. Don't be wrong. If you're wrong, you won't get what you want. But if you're right, investors need you to win so they make money on your back. So help them understand what it takes to make you make money, and you will find they're pretty receptive and intelligent.
That's quite fascinating. And you touch upon something again. I mean, just how large some seed rounds can actually be in this day and age, which is, in the old days, they would have been given their whole own letter of an alphabet.
Yeah, no, I mean, it's also necessary that, America, in particular, the United States, they really understand how to fund businesses and throw money at it. I think was it Mark Zuckerberg's, in the UK, back when Zuckerberg started, your entrepreneur, if they found the angel by luck and just somebody, you get a check for 10 grand. And I think was it Elon Musk gave Zuckerberg $100,000 in the same time. So this sort of wall of money companies, they do need a wall of money if they're going to become very big very quickly.
Yes, absolutely. If you remember, in the late 90s, there was the British chap whose name escapes me now, who was trying to build something like Amazon, except he used the existing infrastructure and raised about 4 million. And I think basically at the same point in time, you had Jeff Bezos was raising about 4 million for every warehouse he was building of a network of however many it was, even then, 10 or 20 across the United States of America. I mean, the scale is quite difficult. And sometimes I agree, I mean, seed investors can be very, very low-balling what goes on. But of course, I mean, you don't have to take equity per se. There's also this whole concept of peer-to-peer lending, which jumps us 2 days into the future, because that's what you've got 200 people looking at on Thursday. So tell us a little bit about the state of that in the UK as well, please.
What's interesting, we found out literally in the last in promoting this event we're doing, is that that's still, actually, it's more peer-to-peer than you might think. So we've got lots and lots and lots of investors signed up. We've got many less advisors signed up than we expected. So I say that's the first theme. It's still individual people really wanting to do this stuff. And they are lending to everything from startups to property. If you can pin it down, somebody is setting up some sort of peer-to-peer platform that enables somebody to lend to the structure.
That's really interesting. I mean, it's quite fascinating, because obviously we've seen some amazing upheaval in China, where they've wiped out the entire peer-to-peer industry after a few shenanigans and so on. And it's intriguing, because also America, really, the peer-to-peer industry seems to have gone quite corporate, and yet the UK is still existing actually as a peer-to-peer loans market.
I mean, I'll know more after Thursday when I've had a chance to talk to them all, but that's certainly the impression we've got, is that there's quite a lot of interest in it. I mean, I think it's the thing, like I said earlier, which is investors are hunting for return and hunting for growth. You know, in a world of 0% at the bank, 0% everywhere else, and stock markets being, perhaps I won't talk to your expertise, Patrick, but the US tech stocks great, but if you look at other stock markets, performance is more variable. So they want something that they can make money in.
Yes, absolutely. And it's very kind of you to flatter me, although I suppose if I'd really ridden this current stock market properly, then I'd be on my own private island in the Caribbean at this juncture. So maybe there's obviously something I haven't quite done right yet, Modwenna. But I appreciate the kind comments, the kind sympathies all the same. Your comment actually about zero interest rates where people are searching for their next investment, that's very apt, because that actually lines up with our next question. So we're being asked on LinkedIn once again, and they're saying, are investors focusing in on COVID affected industries like trends to remote work?
Not, I would say that's part of it. So what investors really are looking for is at the future, and they're looking for what the post-COVID world is going to look like. So they're investing where they see a post-COVID world, because they're investing early. The timing of when they invest and when the company starts really growing may be not synchronized completely. So, but we will see, I think the good news is we'll see a lot of investment in things like vaccine tech and this new, is it mRNA or NMRA vaccine technology? And that's going to give a real boost to healthcare as a sector. But healthcare has always been popular. They're after new internet, they're after the AI, robotics, the stuff that's going to grow really big and become, the new Googles.
It's really fascinating altogether. And thank you for that question, Dermot Core, joining us once again from Poland, who's got his own position in a very, very interesting recruitment-based startup at the moment, ladies and gentlemen, which will be funding again soon, I do believe. So we're coming into the last 15 minutes, ladies and gentlemen, final quarter stretch. What would you like to ask Modwenna? I'm sure you've got a fantastic question for her. Meanwhile, don't forget to hit that like button down at the bottom of your social media. That's the only way, ladies and gentlemen, we can get the message out there to improve the way that people invest as angels in all fashion for startups and other markets, and therefore make make a better, more prosperous world. So deploy your like button now, ladies and gentlemen, thump it with a bit of gusto and help us keep funding the world and bringing people back into employment in these COVID-ravaged times. So back to you, Modwenna. I mean, it's very interesting, not necessarily a COVID focus per se on precise industries, but obviously people are looking at a lot of things. People are investing in a lot of different things. You've mentioned how people have huge portfolios. One could call that pluralism, but actually you run the Pluralist Opportunities Club, and that's a sort of a very elegant twist on the whole theme of pluralism in several added dimensions.
Yeah, so I do. I have a club, and this is something which I think is so important. I have no idea on this call what age ranges you fall into, but basically I think we're going to see a world where the, dare I say it, over 40s are going to create their whole economy of their own as entrepreneurs, business people, and all sorts of things, and they will compete with the 20 to 30 to 40-year-olds who will also be up there building businesses. So we really focus on the 40 pluses and helping them grow an amazingly successful career, but earning not just from one job, but from many different activities. So it might be writing books, it might be investing, it might be angel investing, it might be consulting, it might be being a Ned. I've got 20 different activities that I can help people make a lot of money out of. And then as part of that club every other week, and I encourage you to come forward and get in touch, we actually do pitching events. And what's different about ours is that our entrepreneurs, they do not pitch for money, they pitch for help. And typically they will get a gang of fantastically senior, experienced people come forward and offer to help. And the magic bit is these people help for no cash. They're happy to wait to get their reward later. That might be shares, it might be revenue, shares might be commission, doesn't matter. But crucially, they will come in, wade in, help your business grow, and we can talk about who makes money in a couple of months or a bit later.
What a fantastic advertisement for PIF, the Pay It Forward economy. Absolutely perfect. And at the same time, remember pluralism, ladies and gentlemen. For all those of us who've been working on the internet for 25 years, you've got to have a multi-portfolio based existence. Speaking of which, don't forget to pick up a copy of my latest book, Victory or Death, with a foreword by the chairman of the New York Stock Exchange, Jeff Sprecher, talking all about Bitcoin, cryptocurrency, and more importantly, the future structure of financial markets and fintech as a whole. Anyway, plug over, but I think the point's well taken, actually, because, you know, one of the things that's most struck me at the point when I tried to be vaguely academic, I remember that afternoon many decades ago, Nietzsche only wrote philosophy for 20 years, and he actually knocked in a full 70 years and 10. I mean, he lived to be about 80 years old, but he only spent 20 years writing philosophy, yet that's what everybody remembers he does. There was another 60 years when he was, I don't know, angel investing or something, or going down to the pub, or goodness knows what he was doing. So, I mean, it's sort of funny, isn't it? Because I think the Pluralists Club is a great idea, because you're bringing forward something that actually, in the olden times, the only reason people lived and worked a complete career in one job was actually because they died before they got to the age where they could qualify for their pension. I mean, the whole idea of the old age pension was the ultimate carrot on the end of a stick, which was like, you know, if you can just get that old, we'll give you that money. And of course, everybody carked it before they reached 65. So it's a great opportunity, pluralism. Now, speaking of pluralism, there's one huge thing that we have got to address, the elephant in the room. We've got a great question from Beata Young, no less, serial entrepreneur and the proficient organizer of the Women on IT movement. She's asking, Modwenna, what do you believe are the key elements of a successful investor?
Oh, is this a successful angel investor?
Absolutely, I believe so, yes.
Okay, successful angel investors are, first of all, they can afford to lose the money. So they can afford, therefore, to be much more relaxed about their approach. And they also understand risk. And lastly, they really understand timing, which is not talked about enough in investing in my world. So getting the timing right is one of the most important elements of becoming successful. If you invest in the right company at the right time, the right price, you stand to make a lot of money. But there are many, many investors who invest too late and don't get the return. And there are many investors who invest too early and have to spend a small fortune waiting for the company to catch up with the market conditions.
Yes. I think timing is such an important issue. You can be just way ahead of the market and it's absolutely no good whatsoever, and it becomes such an issue. Or alternatively, you can be the person who's just buying in the peak of the bubble of the most exciting moments. And it's incredible. We're 50 minutes into this conversation and nobody's even mentioned Bitcoin so far. But anyway, I think the thing that's fascinating about the whole angel universe as you see it now is just how sophisticated and large it's become, but yet there's still a huge opportunity in there for everybody.
There is, and I think with the crowdfunding, I would encourage people, you know, it must be the spare cash you'd otherwise spend on the fifth pint in the pub. Do not spend any core money on this activity, but you should definitely get involved in crowdfunding and give it a go and get the feel for what it's like to invest in a startup and the journey you go on. You will find probably the stats tend to suggest that you'll lose at least half your money within a year or two. But when it comes good, my favorite angel investment story is somebody who put in 12.5 grand into an investment. And Patrick, I'm going to challenge you to tell me how much he took off the table when it exited. So
it's in millions. How much?
He put in £12,500.
He took millions.
Well, you've got to give me a number. It's no fun if they give you a
I will say 12 million.
127 million.
Wow. Now that's a number. I mean, that really is a number. I mean, that's the house in Catferrat, the lovely house in the Georgian Terrace in SW1, plus whatever you want to drive, and yes, a reasonable lease on the jet, and the house in Catferrat and everything. Yeah, I mean that's really good, and retirement money, and a $50 million angel fund to carry you on.
Yeah, exactly. Quite a lot of punts, can't you, with the extra 10% you made?
Yes, exactly. I mean, absolutely. It's really, really quite. That's a stunning number. I mean, that's an incredible advertisement for what's going on. What about though? I mean, just looking at the other side very quickly, and I'm going to come to a great question just coming up from Martin Watkins. What about the downside of that in terms of? I mean, what are the numbers we're seeing of companies? Not just startups as all, but startups that go forward and credibly try to angel fund and then work their way through the angel networks. What do you think is the sort of number who are failing out of those?
It's frightening. There is not enough capital for the demand. I'm not sure how many of you are following the UK market, but last year the government, in order to help SMEs help with COVID problems, they launched a couple of lending schemes. And I think I saw last week that it's something like £68 billion has been lent to 1.4 million companies. So I was talking earlier about 6,000 and 8 billion. You realise just how much capital demand there is for small businesses, and we want to crack that. We want to find a way to get that capital into those businesses so investors can make returns and entrepreneurs can win.
And it's fascinating because, as you say, I mean, the UK is doing fabulously well, raising 6 billion a year, but then all of a sudden you're talking about an equity gap of potentially 68 billion, which shows there's quite an opportunity out there.
A massive, and it's going to be very interesting to see how this year turns out. I mean, angels were a bit jumpy because they tend to like to know the entrepreneurs they back. I mean, know them as in meet them and feel that they can connect. And there was a certain amount of caution around in a Zoom world where how can you trust somebody on a video screen? But we're beginning to see that crack now. It's going to be tough for a little while longer, but we're seeing deals get done. Particularly, if you can find yourself one angel, that's a big step forward, because then the angel should know other angels, and then the other angels will rely on the person you know to give you that vote of confidence to say you should be backed.
That's really, really interesting altogether. And that brings us to a great question with 6 minutes to run. Martin Watkins, greetings to you. He was actually an early stage guest on IPO-VID all those months ago. Martin, it's great to hear from you this evening. Doyen of the City of London, one of the many key figures in the Exchange Invest 1000 of the most influential people in the exchange industry. How do we improve, and actually he's corrected himself here, how do we improve the loss appetite of European investors to reach the levels evident on the US West Coast?
I think, well, I'll tell you what I really think. I'm not sure it's going to happen, but it's what I think should happen, is that two things. One is we need to bring into the whole of European education training about business and entrepreneurship. So from the age of 5, when children learn to count by playing shop, we should just keep them playing shop for the next 20 years. So it becomes part of their DNA and they become more skilled at judging risk for themselves. That's one of the things I would do, but that's probably a 20-year project and requires me to become an education secretary of a major nation to even start it. I think the other thing is to not allow investors to be teased by quick wins. So we have to let investors get educated about risk and loss. And I think if you talk rationally to people and explain it in clear language, and they understand about diversification, they understand about timing, they understand about quality of business and business teams, that will help the market to grow. But boy, do we need it to grow, because we need a lot more of this capital to come into the market.
I think that's a really very, very sensible and serious point that you make in every possible respect. I hope that helps you, Martin, with the answer. And certainly it strikes me that even now there's already really a disconnect, isn't there? I mean, the continental European market seems to have almost no loss or risk appetite for equity investment. I mean, everybody, gentlemen, gentle ladies, and everybody else seems to prefer bonds. And actually, the UK has broken through to make itself a much more significant startup arena.
Yeah, I think the UK, last time I saw, the UK is 50% of the European continent market, and we're second to America, but America is bigger than us by 3 to 5 times, I think. So we do need to encourage our European friends and cousins to come and play. But the trick is to not let people take too much risk too early with something they can't afford to lose, which is why crowdfunding is a really interesting place to start.
Yes, the crowdfunding thing's fascinating, as you say, because you can speculate with minuscule amounts of money. I mean, lots of cases, £50, £100, even less, in order to get yourself going somewhere. And you also learn a lot, because I think one of the great things is, from the issuer side, the companies learn a lot about how to actually behave, so that if they do go towards the stock market, and even if they don't, they know how to talk to their shareholders. And if they, as you said earlier, if they can talk to their shareholders, they're talking to their ultimate perfect customers. Yeah,
it's a case of not trying to artificially push it too fast without doing the right steps. And I'm a massive fan, and I do training of angels in, I've just trained a load of angels based in Thailand, literally on Zoom. I was in Qatar 18 months ago training angels in Qatar. We do need to help individuals understand that it's a good thing to learn before you start, because it's much less painful if you made a considered investment than if you made a risk investment.
Modwenna, that's absolutely fascinating. Okay, we've got 2 minutes to go. What are your final thoughts? Tell us something that is going to benefit us and how that's going to make a difference to our world in the course of the next 5 years in the world of your pluralism or other opportunities.
Okay, so what I'd encourage you to do is bring your younger, particularly female, because there's a real problem with female entrepreneurship and female investment. So if you ask me to take a 5-year view, Patrick, I'd say bring your younger cousins, friends, family, particularly females, particularly from diverse backgrounds, bring them with you, and you teach them. If no one else is, you teach them and show them how to do it. And that will bring a new generation of hopefully tenfold larger amounts of entrepreneurship and capital, and it will become completely normal for everyone to be some sort of an angel investor.
Modwenna, I think that's brilliant advice, marvellous news, and also, of course, for Women on It, as run by the brilliant Beata Young, will be ecstatic to hear the advice, and I agree with you. And I think you also, if I may say so, missed out one very key thing. Why is it great to educate young girls and young women and to get here? Because actually their results in startups when they do get funded is much, much more successful. So there you go, a double whammy. Ladies and gentlemen, bring out your children, let them come out towards this wonderful arena of angel investing and entrepreneurship. Let us gather together and build the fruits of a wonderful Eden of tomorrow of entrepreneurial excellence. Modwenna Rees-Mogg has been along today. She's shown how we've come from, well, actually, very early stage seed funding in the UK in the mid-1990s, all the way through even in the early 2000s when she set up her own original angel site. There was really a paucity of information, a paucity of startups, and yet here we are now. We're funding something like £5 to £6 billion of startups in the UK. But as COVID has shown us, when the dark clouds of disease hung upon us, there is demand for maybe 68, 70 billion. We're talking about still a 90% opportunity to expand what's going on. Whether we've been talking about the risk and loss appetites with Martin Watkins, whether it's been issues about spin-offs and other factors with Dermot Corr. Thank you both very much for your questions. Absolutely wonderful to hear from Etienne Goffin. I hope you are packing your bags for London right now, Etienne. It's the place to be in the startup community. They say 50% of the European market, despite Brexit. And at the same time, thank you very much to Rob H. It's been great to have you and others asking us questions on this show. It's been a joy to have our guest this evening, Modwenna Rees-Mogg. Don't forget, check out the Pluralist Opportunity Club. Bravo, Modwenna, says the Woman on IT movement. Thursday evening, they've got to get together. They're talking about P2P lending. You can find it at the Pluralist Club website. Check out the portfolio of Modwenna Rees-Mogg. Thank you very much to our guest. Thank you for watching. Have a great week in market. My name is Patrick L. Young. If you're looking for pith in the short term, check us out at exchangeinvest.com. Thank you for all the great feedback.
Thank you.